Hi everyone, this is Rafe and welcome to our lecture on exchange flows. Now in today's lecture we are going to take a look at something that is very important in the people. If they want to hold an asset for long term, they prefer to, instead of leaving it in the exchange, they prefer putting that coin on their physical wallet. That is their way of making sure their crypto assets stay secure. Now we can use this data to potentially predict what is going to happen in the market. Now, it has two major factors that helps us determine the next crypto move. Again, as we discussed, similar to supply and demand. Supply and demand is the core of the crypto. Every sort of financial market works on the concept of supply and demand. Now, in this case, the first thing that we are going to take a look at is called inflow. Inflow basically means people entering the market. Inflow, right? People are coming inside the market to trade. Now we can use it in this way. We can assume that if somebody is holding an holding Bitcoin, right? He has a target of $80,000. Bitcoin hits that price, and when they when the price is approaching near, they started putting their assets in the exchange. As soon as the price hits that target, they started selling the price, right? Let's and likewise, opposite to this is outflow, right? If somebody wants to buy the Bitcoin at a cheaper price, uh, let's say they wanted to buy Bitcoin at $80,000, and when price hits $80,000, they bought that coin and then they moved it out of the exchange so that their Bitcoins stay safe in case if the exchange crashes, right? Similar to what happened with few previous exchanges. So this is their way of also keeping their cryptocurrencies secure. Let's take a look at the chart, right? The first thing that we are going to take a look at is the inflow chart, right? This data shows the entire inflow of what is happening. What is the price of Bitcoin? How much exchange is inflowing? How much coins are coming inside the exchanges? Then we have the data for outflow. Again, you can take a look and understand this. But in today's video, we are not going to focus on inflows. But in today's video, we are not going to focus on inflows and outflows. We are going to take a look at their net flow, right? Now, the formula for net flow is really simple, as we discussed earlier uh, about net inflows and outflows. Well, if we minus inflows from outflows, we get the net flow of this. We can consider it like this. Let's assume if the net flow is positive, right, we can expect a bearish pressure in the market. Likewise, if the net flow is negative, we can expect a higher bullish pressure. Now let's go back and take a look at this chart. Here is the net flow chart. By the way, we are using the crypto coin chart. Now again, you can see in the last 3 days, the, the inflow was positive, the net inflow was positive. So we saw a huge drop in the market, right? Now you can use this data to potentially predict larger crypto moves, right? Do not directly use it as a buying or selling signal. Combine other factors of on-chain analysis and technical analysis and then take a trade. Again, this video was short and concise, but again, uh, a lot of more content is coming. If you have any questions, please feel free to write us a comment and join our Discord community from the link below. Have a great day. Goodbye.